Hello everyone and welcome to Net Crypto, where you get important information and news about all coins and tokens of interest. And today, we are going to be talking about a topic that everyone on the internet has been talking about for the last couple of months. I think by now you are sick and tired of hearing about it. What are we talking about? The AI bubble. Right? The reason why I'm doing this video is because this bubble is going to generate some of the biggest opportunities of our generation, right? So let's just jump straight into the content. I actually did a formal report so that I can have a structured way of delivering this information, right? So AI bubble, how capital is moving and why risk is building. So the executive summary: artificial intelligence is one of the most technological advances in modern history, right? The most powerful, right? Its impact is real and irreversible. However, history shows that technological breakthroughs do not automatically translate into stable market outcomes, right? So this report explains why the AI cycle is structured differently from past technology platforms, how capital has moved through the AI ecosystem since 2003, when OpenAI launched ChatGPT in November, and why this creates bubble-like conditions. Not because AI is failing or fails, but because monetization and scaling were forced too early, right? So that's why the bubble is going to happen, and we're going to be going through that into this report. And at the end of this video, I'm going to be sharing with you some key thoughts, right? Because I think there's an opportunity for our generation here, right? There's a huge opportunity for our generation. So this is not a prediction report. It is a capital flow explanation, right? So introduction: how big platform used to win and why AI is different. So most of the large technology platforms in history followed a similar path. For example, Google Search, YouTube, Facebook, Gmail, right? Google Search was free for many years before advertising scaled. YouTube operated at a loss long before monetization matured. Facebook focused on user growth before revenue dominance. Gmail was free infrastructure long before it became embedded into Google's ecosystem, right? So in all these cases, adoption came first, dependency followed, monetization came last, and it was explosive, right? When the monetization came, think about Facebook ads, think about Google search, Google ads, right? Multiple products that Google has. These platforms became unavoidable because they became highly profitable. AI did not follow this path, right? From the moment AI went public, it faced massive and unavoidable costs: data centers, GPUs, continuous compute, right? Energy and cooling. As a result, AI platforms attempted to monetize immediately, primarily through subscriptions, before dominance, before dependency, before cost efficiency was achieved. And that's the biggest problem. So this structural difference is the foundation of the AI bubble risk explored in this report. So section 1, there are going to be 7 sections, right? In 2003, AI such as ChatGPT became accessible to the public. Adoption surged almost instantly. At that same time, a critical issue emerged: every additional user increased costs, not just reach. Unlike social platforms, AI usage scaled expenses, not just engagement, right? So you can see from the first diagram, ChatGPT launches late 2003, and then you see the surge, right, of adoption. And with this surge of adoption, costs increase. So it shows rapid adoption sets up the cost problem, right? Section 2, capital wave, hardware and infrastructure, right? To run AI at scale, companies required GPUs, data centers, accelerated computing. This caused capital to flow rapidly into hardware and infrastructure providers, led overwhelmingly by NVIDIA, right? AI developers became direct consumers of NVIDIA, creating immediate revenue visibility. Narrative at the time, the narrative that was going on at the time is, if AI grows, hardware wins first, right? So everyone was jumping into hardware. That's why NVIDIA has got huge, in terms of, if you look at the valuation currently. This was the first and most obvious capital wave, right? So you can see Nvidia is okay from 2020, and then come end 2022, everyone sees, wow, AI, okay, let's invest in the base, right, which is the hardware. The root, the foundation of AI is the hardware. Let's invest. Nvidia, some other companies like Nvidia, they go up, right? Their valuations are going up. So this shows why Nvidia became the primary early winner. So section 3, strategic capital recycling, Microsoft, OpenAI, Nvidia. There are many more companies. I just put these three to just simplify it, right? As AI cost increased, OpenAI required more than customers. It needed strategic capital and infrastructure support. Microsoft stepped in, large direct investment into OpenAI, cloud infrastructure versus via Azure, deep integration into Microsoft products, right? This created a reinforcing loop. Microsoft funds OpenAI, OpenAI spends heavily on compute demands benefits NVIDIA success reinforces the AI narrative. So you see the triangle loop, right? So capital began circulating between a small group of dominant players. So you see it right there, right? This is oversimplified, of course. It's way more complicated than this if you go and check out other videos out there. So strategic capital loop, Microsoft, OpenAI, Nvidia. So the capital is just moving around, right, like that. So section 4, capital wave 2, platforms and software. Once hardware gains became widely recognized, capital rotated up the stack. Investors shifted focus from who supplies AI to who controls AI platforms. Money now flowed into Microsoft Copilot, Google Gemini, OpenAI platforms, enterprise AI software. At this stage, competition increased rapidly. Subscription models dominated, valuations expanded on future expectations, right? So that's where you see now AI platforms. Now you start to see they're also catching up. So this is just illustration, right? It's not the actual data, right? And then section 5, fragmentation and monetization pressure. As more AI platforms entered the market, free tiers reappeared, right? Because remember, it was subscription heavy. And then now you've got a bunch of AI companies coming in, and then now free tiers are coming back, right? Pricing pressure increased, differentiation narrowed, because now you're competing with the same AI product. If you make everything subscription, people will just move to the free tiers. So you can't afford not to have a free tier. And this increases the problem because you've got a cost problem, right? The underlying technology, the underlying hardware, and all of that, you need a lot of cash. So that created a problem. At the same time, AI operating costs remained high. Monetization struggled to scale fast enough. Subscriptions alone could not fully absorb infrastructure expenses. And this is what is happening right now. So this is creating growing tension between expectations and economics, right? So you can see in 2023, OpenAI, ChatGPT. 2024, lots of other companies of AI are there. Free tiers are coming in. There is competition on price, right? Which is not good for AI because AI needs lots of cash, right? Section 6, shock events and market sensitivity. Now, this section is very important, right? Because this gives us a glimpse of what is going to be happening when this bubble bursts, right? So when capital is crowded, even small events matter. New competitors entering the market, concerns around efficiency or pricing, events like the DeepSeek moment where markets briefly wobbled. These events did not signal failure, they revealed how sensitive the system had become. Do you remember a couple of months ago when DeepSeek was announced, how the markets, all the markets went down? Even Bitcoin went down, everything went down, and everyone, it was all about DeepSeek. It only lasted for like what, a week, couple of days, and then everything went back to normal. But when this bubble is going to burst, right, it's going to be catastrophic, right? So why this creates bubble risk? Section 7, the last section. Bubble risk emerges when capital is concentrated across all layers. Expectations are shared, exit doors are narrow. This does not require AI to fail, it requires disappointment, liquidity stress, or a shift in confidence. When that happens, selling tends to occur simultaneously across layers. So you start to see people now are selling all over the place. Microsoft, Nvidia, especially Nvidia, right? OpenAI, all these platforms, everyone is selling. And when that happens, you're going to be seeing that all these players across hardware companies, platform layers, applications, everyone will be selling. And that's what will cause the bubble to burst and the markets to go into red. Now, this is the biggest question. What will you do when everyone is forced to sell and they are actually selling? Right? What are you going to be doing? Well, as for me, I've got a strategy, right? And I have shared this strategy with the Net Crypto members in this video right here, how I'm preparing for the AI bubble, right? So if you're not a member, you need to join membership to be able to watch the video, right? Or there are different ways to join. You can just click the link that is in the description for this video, right? Or you can just join membership right here, right? So why is this important, right? Because preparation matters. Panic removes choice. Liquidity disappears fast. Good assets get sold with bad ones. Cash beats conviction in a crisis, and preparation turns fear into opportunity, right? So that's why it is important to have a strategy, right? And I've got it right there. I'm sharing it with those in the membership community, right? So if you want to be part of that, just consider joining the membership. There are tons of perks, right? You'll be able to actually get in on the normal strategy that we have for crypto that I share with the members there. You get access to my email where you can actually request investigations, scam investigations, and so on, right? There are tons and tons of perks for joining the membership. So thank you for watching, and I'll see you in the next one or in the membership section.